Good afternoon. Today is Monday, the 25th of April, 2011, and let's take a look at these markets here. I wanted to tell you that on Mondays, this show will be free on alphatrends.net, and that's brought to you by Realtic. All the charts that you see me look at are from Realtic, and that's the platform that I trade on as well. So, Realtic.com is their website. I would encourage you to check that out and look at the list of brokers they have. Anyways, the S&P 500 was down 14 cents today, but you can see here that it continues to hold up very well just underneath that 134 level. And we've still got this inverted head and shoulders pattern that is pretty obvious in here. But, some people pointed out perhaps it's too obvious. But until prices break back down below what is now a significant higher low near the 130 level, the buyers are still in control of this market. On the 30-minute time frame, we can see that resistance in here near 134. We did get maybe a little bit ahead of ourselves in these markets, but I think that we've got a market that's behaving well. That is, this prior resistance from last Wednesday was holding as support in here today. So far we have a market that's digesting through the gains through time. You can see the volume was very light in here today, and we have the Federal Reserve on Wednesday. That could bring about some further volatility, obviously. But I think a bigger level this week that we want to see hold would probably be down near about 132.30. That's where we have that rising 5-day moving average right now. That's where we have this prior resistance. So as long as we continue to hold above there, I think that's going to be an important level to look at this week. The weekly time frame again is very bullish looking. It looks like we've had higher lows in here and we're consolidating here for a breakout. So the weekly time frame still bullish here. Now we have to wait for not necessarily wait for, because obviously the majority of stocks continue to be in uptrends, but this break past 134 that holds will confirm that this market on the weekly time frame will be looking at higher highs here in the very short term. So 132.30, really that's going to be our key level, I think, for this week to hold as far as support. We would be a little bit concerned if it broke today's lows near 133.20, and perhaps it would lead, that is, to the 132.30 level being tested. But I don't see any real reason for caution or bearishness here right now. The Nasdaq is, as we know, broke this resistance at 58 last week, and you could argue here as well that we're seeing the volume dry up and the market's overbought, but it's not pulling back price wise. 58 to 57.90. That's going to be a level that we want to see hold because it had been resistance, and then obviously we gapped higher. But this market was up today 15 cents versus, of course, the S&P being down a little bit, and both markets really pretty tight, quiet ranges throughout the day. And again, we had very low volume in there as well. The Russell 2000 was down 11 pennies, and in here we can see obviously we're above the rising 5-day moving average. Last week we had the successful bounce from that rising 50-day moving average, and when we look at that 30-minute time frame, we can see the bigger level actually is on the daily time frame, which is 83 bucks. I think if we test that and hold above it this week, that would be a good thing for the Russell 2000 to hold above 83. You can see the 5-day moving average down at about 83.10 or so. But Russell 2000, 83 is the big level, 83 to 83.20 really. The semiconductors were up 13 pennies, and obviously this group was rescued last week by earnings from Intel. That's when it got back above that 50-day moving average and that 35 level. So 35 will be the bigger level for it to hold this week, and so far there's no reason to think that it won't. Once again, we had lighter volume in here, but I think people just don't want to chase this market after the big move that we've seen, and with the Federal Reserve 2 days away. Financials continue to look kind of ominous here. This is looking more like a bear flag than anything. If you look at that diminished volume here as the market rallies up to that declining 10-day moving average, the 10's below the 20, the 20's below the 50, etc. If we back it up a little bit, we can see we're also below 100, and the 100-day moving average, that is. Perhaps breaking 1580 would be something that to think that we're going to see a deeper pullback. And if that was the case, then we would obviously have to reevaluate the other markets as well. But for now, the financials, I think, remain kind of on caution, just a yellow light in here. The big talk and where all the big volume is in in metals, in particular silver. You can see here. Let's take a look at that SLV, because there's really impressive volume in there, trading. I guess what is this now in silver? 100 and close to 200 million shares. Just a massive run in there. It did finish higher today on the day, and who knows where the top is. Some people are saying still buy it. We had this based on our market, our equities market hours, a gap higher, and closing kind of in the middle of the range. So picking a top, obviously a very difficult game. No one has done it yet, and have been right for more than a day. Some people obviously might have hit it intraday today, but just massive volatility and a very dangerous game if you're looking to play tops.